Good morning, everyone. It is Thursday, September 22nd. We're going to take a look at the morning charts here. We've got a lot of action going on. We had a big move into the close yesterday with the FOMC, the Fed's coming out and more or less saying nothing is good and it's not looking like it's getting any better for a long time. And that caused some serious selling in the market and a rush to safe havens like the dollar and bonds. So let's take a quick look at the charts here. Here we've got the US dollar index. This is the 60-minute chart. And if I just zoom out a little bit, you can see the recent impulse leg to the upside. I spoke about this in last night's article. You can see we broke these previous pivots, clearly moving above them, and we had a pullback test down into the support zone. And this is where we took a long position in the SP or UUP ETF, the double long dollar. And we had a nice surge right off the hop, had a little bit of consolidation, and now we're getting that second run in the US dollar. Now, if I just zoom out even more, I just want to show you where our kind of target is for this. Looking at this target and doing simple measured moves, if you take the bottom of an impulse leg to the top, that is your first move. And then once you get a bull flag, that considers, usually you see that as a halfway point. And if you take this move to the upside, we've got 1, 2, 3, 4, about 4 points to the upside. Moving that to the measured move here, we've got 1, 2, 3, 4. So we've got somewhere around the 80 to 81 area. I think we could see the US dollar reach, which happens to be right through the middle of this congestion before. And that's where you're going to find the most resistance, is right through the middle of that noise. So we are well on our way to that level and rocketing to the upside this morning. Now this big move up in the dollar, I pointed out if we get this move up, which we are, we're going to see it push commodities and equities sharply lower. And that's what we were positioned for. We're positioned for a higher dollar and lower commodities. Now taking a look at the crude oil chart to see how that's played into things. You can see this is a 4-hour chart. We go back a couple months, and this is simply that pattern I've been pointing out for a long time. This rising wedge, which has taken forever to unfold. I remember watching it collapse down here, and I was waiting, literally been waiting almost 2 months for this pattern to start to work into the apex and start to show signs of distribution. Finally, we ended up getting a short right up in here, and we had a nice pierce a couple days ago of this support trend line. We took partial profits at about 7.5%, and since then we've just kind of formed a mini bear flag to the downside, and yesterday we saw it start to continue to move down. Now in overnight trading and pre-market this morning, we're seeing crude oil continue to fall sharply. It's down 5% this morning, and that's going to send our bearish, our SCO, our shorts on crude to rocket this morning to the upside. Our SCO position looks like it's gapped up $3 in our favor this morning, as long as crude oil stays down at these current prices, and that's a significant move. Now if we just zoom in on this chart, just looking at it, you can see visually it's made a move that normally when it makes that size of a move, we have some type of bounce. So I wouldn't be surprised that we're going to be opening up in an oversold condition. The fact that we had a down thrust and then it kind of stalled for a little bit, a couple bars, and then started to pick up speed and went into a waterfall mode. This is usually a sign that you're coming into a bottom. The fact that we pierced a low, another low, and another low, that's why we're seeing this run of the stops. I pointed this out before, and we're coming right into more or less this congestion zone back here where we had lots of bars going through. And this is, I wouldn't be surprised if we get some type of bounce up to around the 84, 85 area, and from there we could see another flush to the downside. Now I pointed this out in an article or a video a couple days ago. More or less in an uptrend, you get these blades that kind of go this way, and then when the market gets toppy, you kind of get volatility where it goes straight up and down, and then the blades actually start to turn. I consider it more or less a bandsaw blade or a circular blade here, and then they start to actually change direction. So they have nice long up thrusts, short pullbacks, and eventually it goes the opposite direction where we get longer pullbacks, smaller up thrust, longer pullback. So it completely flips from more time spending moving higher, and now it's moving to more time spending lower. And of course, as things top out, you start to get these uh, head and shoulders patterns forming. You get a neckline, you get a breakdown, test the neckline, and that's where we stand, and that's kind of what we saw going into this. If we were to zoom out, this pattern here is simply that big rising wedge we saw from in crude oil from over the past 2 months. So all this price action is happening within the rising wedge. We're seeing, volume, selling volume picking up, and some good spikes of selling, showing that every time it gets up to resistance, there's a nice wave to the downside. And that's one of the reasons why we ended up taking a short position right in here. Start to form a shoulder. It was starting to look exhausted. The dollar was looking ready to rally, and we got everything moving in our favor, and that's why we've got this nice down thrust working in our favor here. Now looking at the gold chart, I've been pointing out that I'm still bearish, neutral to bearish on gold. I don't really want to short it simply because it is still seen as a safe haven, but it's under pressure right now. It's overbought. Any strength in the dollar is going to try to put pressure on it. And we're seeing gold trade down pretty sharply this morning. It's down about 3% in futures trading. From yesterday's high, we're seeing it fall 20, 40, 60, 70 dollars an ounce from yesterday's high, and it continues to sell down. Silver's in the same boat. It is down over 6%. Actually, it's down 7% now. And zooming in on this chart, you can see from yesterday's high, it went from 40.75 and is all the way down at 37.70. Huge drop in silver, and that's one of the reasons why I don't really want to get involved with silver. It had a pretty ugly chart to start with, and it's extremely volatile, and it's just I don't see the risk reward for silver unless you're maybe holding super long term. But right now, it's actually coming more into a key support zone. You can see these pivot highs, this pivot low. It is actually coming down, testing into this area. And I think that's got more of an opportunity, but I'm still not touching it right now. I don't need that extra risk just because, it's a precious metal. I know a lot of people want to trade silver and gold, but there's just times when you don't need to trade it. You shouldn't be trading it, and it's best just to stick to other things that have clearer setups and don't have as much emotions into them. Now taking a look at the bonds, the Tlt Etf, we're up at some major highs. It's had a huge run. Everybody's been piling into bonds in the last couple months. You can see the last 5-6 months it's just continued to move higher. Yesterday I pointed out that the market bonds are starting to get really toppy. We've got these multiple highs similar to what I was pointing out in gold just before it topped there. You get a push to the upside on huge volume, and then you get a strong sell-off. You get a push to a new high, strong sell-off, push to a new high. You start to get these big gaps, meaning volatility is picking up. It's just jumping around, and the bulls and bears are kind of debating if they should be in bonds or not. I pointed out what we really need with this type of price action is one great big surge to the upside, more or less a blow off top, you call it. You'll see it just go parabolic, go straight up, and usually a lot of times you'll see it come straight back down soon after. But again, I don't want to get in front of this yet. I want to see the blow off top. I want to make it sure it looks like a blow off top before we do it. And I don't mind seeing it reverse and coming back down and forming some type of bear flag and actually look to short it somewhere in there, because it could actually form, say, a mini head and shoulders with some type of neckline. And if we could short it up here, we could catch a nice pullback with a substantial gains there. So if I just pull up the inverse, we would short it using the TBT, but again, I'm not ready to take advantage of it yet. I've been waiting for this to unfold similar to crude oil for several months. I get excited about the price action, and then it continues to erode and show that it's getting closer and closer to a bottom, but we just haven't had any significant setups or price action that is indicating it's time to try and pick a bottom yet. So we just continue to wait as it drops to a new low. And more or less, we got big volume yesterday, so this is a good sign. You want to see a big volume, it means panic in the market, and everybody's kind of piling into bonds. And that's what we want, because once everybody's panicked in, it's usually going to retrace, and we'll probably see this TBT fund have a nice move to the 28, possibly 34 area, which is kind of the window. But who knows how much lower it's going to go, and that could change the target outlook in the near future. Now looking, if I just pull up the TBT, I'll go back to TLT here just for a minute, just to show you what's going on in pre-market. If I change this to the 24-hour chart, oh, it already is. So you can see we had that nice move up yesterday. If I go to the futures or pre-market trading, you'll see the big move we had in overnight and pre-market this morning. Yesterday the market closed right here. So you can see we're getting pretty much that same move again this morning. So we're going to get a huge gap up in bonds. Everybody is piling in, and this is really going to create that huge surge and parabolic spike in bonds. And I think we're going to be getting closer to a top in bonds, but right now it's on a tear, and this momentum could last for a couple days. So we're just going to hang tight, let it play out, let it provide a high risk or a low risk opportunity that's got some probabilities on our side, and then we'll be looking for a potential buy of the TBT, but we'll play that by ear again. Now looking at the SPY, just pull up the SPY here. This is the SP 500. This is regular trading hours because this is the ETF, and you can see obviously we were in a sharp downtrend. We had a nice move to the downside, big consolidation, and it started to move back down. I'm kicking myself for not getting us in short here. We had that big gap down earlier this week. I wanted to come up, see a gap fill, and the fact that we had the FOMC meeting coming out in 2 days, and I didn't really know what they were going to say. I really didn't want to get us into another position just before the meeting because it could sharply go against us, and unfortunately it would have been a great short. I just didn't think we needed to take the extra risk because of that news that is completely more or less random coming out of their mouths, and you never know what they're going to do. So we didn't take the position, but we can see it's moved sharply in our favor of what we were anticipating. And again, if I just go to pre-market time frame here, you'll see how low it really is. It's made that big drop again this morning, so we're trading down huge. We're going to have a big gap down in the equities market today, and a big gap up in the US dollar. So everything is based more or less off what's going on with the US dollar, and everything is just getting pushed around, and we got to be very cautious what we're doing here. Anyway, so we got a big day in the market, and if I just pull up the futures, I'll just show you what's going on. Futures, you can see here's yesterday's trading hours. We had big volume when the Feds came out and made their statement. Big move down into the close. In overnight trading, everybody was in shell shock. The market just kind of floated sideways for a bit until everybody kind of got a grasp of what was going on, and now we've started to continue to move down. And we've had such a huge move down this morning that the market is going to gap into an oversold condition. I wouldn't be surprised if it gets bought up, but we might see a downward thrust into the a little bit into the open. Maybe see it bottom at 10, 10:30, or 11. Usually those are key pivot points. I think there's going to be a lot of fear and a lot of stops getting triggered when the market opens this morning. So we could see an additional wave of selling, but we could see a very strong recovery rally somewhere, probably a 2 to 3% recovery rally from the lows today if things work out in that favor. Anyways, that's it for now, and I'll talk to you guys in a bit. Bye bye.